All right. So I just entered a trade and decided to make a video. What's up, guys? This is textbook. I've shown this a million times, but here we go again. This is a daily chart, Australian dollar versus the yen. Very simply here. This is a fib that I had already drawn during the live stream this week. I had drawn this fib in, so that's just from this low to high here. It's looking at the big picture as we were trending down where we were coming into. Now, this is the 618 level, 50 to 618 as I use it, and this is typically where there may be a bounce at the 618 in a move like this. Now, going counter trend like that, it really has to confirm it. Let's do that. 1 hour chart, really strong trend. And here's our reaction today as we just hit the 618 overshoot pattern. If you could see, it went slightly lower. That's a very typical pattern here. The reaction hasn't closed. There is 1 minute left on this candle. So as I entered the trade, there was a few minutes left. But having a bullish reaction, confirming that strength, high volume showing up here. We also saw some decent increase in activity into this area yesterday to stop the momentum of this trend. So, but here we're really hitting it off that spot. 1 hour just confirmed now. And then the 5 minute, very important. Again, the lower prices today are showing some buying here, earlier on here, again, stopping the down move on increased activity, right, with a higher reaction, simply put on that. And then we get to our 618 level here, 25 minutes into, no, where am I? Into London Open, yeah, at the time that the strength showed up, 25 minutes in. So the London Open activity was there. So this is really stands out as some high volume, of course. And there's our 618 overshoot pattern. We come up and test. This is a test for sellers, testing for supply. We know the demand is high. Where's the supply? And also looking to the left at the high levels. Is there weakness, supply coming in? We don't see much of that in this price area, immediate price area here. And then here, very low volume. And that's what I use the 14 EMA test for. You can see how selling takes over at that level. Here, not so much. And we're starting to push up through and basically have a no supply confirmation here, low supply, and then moving up as a result. So in this pattern here, that is perfect for me to get in the trade. The high volume here, stopping volume, strength, the fake break of the level, and then the low volume showing the selling is pretty inactive at the moment. So even if it's not a crazy big reversal of the move, the chart says it's more likely now to have a retracement going forward, some sort of bounce, if not, big reversal. So, even just testing a previous swing point for today or whatever as targets. See how it behaves. As far as stop loss and risk reward, you see those targets over there. Those are really like early targets if we're actually reversing. But realistically for the day, perhaps in these areas. But what was I going to say? The risk reward and where the stop loss is. So here we already did the really test of the lowest level I'd like to see. I can allow for another fake break as we may spend some time accumulating, pop down again. So leaving room for that, I think my stop was 74, 75. So leaving room for a fake breakout as I normally do on these type of entries. It can overshoot and get bought back up. So I'll make sure it doesn't get hit. But that's a good risk reward here, of course, looking at that, really talking about the bottom of potentially some sort of retracement here. All right, so that is stuff that I have shown a lot and really just doing the same old thing, but that's good, right? Repeat, follow the rules and repeat. All right, guys.